There are interest rates on credit cards out there right now that you might not be able to believe. One example, there's a credit card from First Premier Bank of South Dakota that charges 59.9% interest. But here at the Municipal Credit Union in New York, their credit cards are capped at an 18% interest rate by law. So why the divide? Well, despite the latest credit card regulation, there is no cap on the interest that banks can charge their consumers on credit cards. And some say that is a gaping hole in the most recent legislation.
What we have right now are millions of Americans who are paying 20, 25, 30% or even more in interest rates on their credit cards. And frankly, that is immoral. That is usury.
Whether or not the government should cap interest rates is certainly a contentious issue. To find the root of it, though, you have to go back more than 30 years to a 1978 Supreme Court ruling that deregulated interest rates, allowing national banks to charge any interest rate they want. In the court's opinion, Justice William Brennan said the decision is better left to the, quote, wisdom of Congress than to the court. But since that decision, members of Congress have tried many times to cap interest rates, and each time they've failed. Are you confident that with Congress as it stands now, you will see a cap on interest rates, or is that just a pipe dream for the future?
Well, it's an aspiration. Had some of us who view that as a legitimate public policy been able to get it in this bill, we would have. Credit card companies are always going to make money. We're not for them not making money. But the question is the abusive practices and the unlimited interest rates.
Case in point, that nearly 60% interest rate we told you about. Banks offer these types of super high-rate cards to the most risky borrowers. And as credit card issuers grapple with new laws that limit the fees they can charge, there's evidence more are turning to higher interest rates to make up for that shortfall.
Interest rates will be a bit higher across the board, in part because of the economy and in part because of this new rule.
But when it comes to finding a solution, the American Bankers Association argues simply capping rates just won't work.
History has shown that interest rate caps harm the very people it's intended to help. This means low-income people, people who've had problems with credit in the past, and people who haven't had a lot of experience with credit. They end up not being able to get credit.
But here's the thing. The nonprofit credit unions say they make it work and have for decades.
Just to use the excuse that because we can't charge whatever we want to, then that's somehow going to impair our ability to lend credit. We're doing it. We've been doing it for more than 90 years right now with responsible rates that people can actually afford.
Still, not everyone can borrow from a credit union, and unless there's a law that applies across the board, the issue will remain front and center in this debate. In New York, Poppy Harlow, CNNMoney.com.